those. And I'll bring up my chart as well while we wait for everyone so you can see what's on the screen. And I'll clear that. So it's looking like a little bit of a spinning top at the moment, isn't it? Like it could be a bit of a reversal.
It is, and I'm watching that 13.8. That's the level for me. That is very important.
13, did you say?
13,800. That's our last major lower high from
Yeah.
May 2019 or June.
Sure thing. Okay, so we are going live. G'day, Scott, Peter, Nelly. 23 waiting. Awesome. Okay, I'm going to share this on Twitter and a few other places. While Dan and I have a bit of a chat. So, good morning, everyone. Do you have the chat up, Dan? Do you bring it up on another screen or tab and mute it and watch the comments come in?
Yeah, I've got like 6 windows open right now. It's there somewhere. Let me find it again.
So we will take questions from everyone. I said, Dan, everything from meditation to Donald Trump to Bitcoin. So be prepared.
Same thing, meditation and Donald Trump.
Yeah. Okay. I've shared it in our group already. Have you shared it in your group if you want to?
Yep, I did. I just need to, I'll retweet your tweet. I'll retweet your tweet.
Oh.
All right, I'm muted over there.
Okay, cool. Dan from Chart Guys to discuss a bit of everything. I think I had my most popular tweet ever last night, Dan.
Really?
When I did the write-up about Wi-Fi or Wi-Fi or however you say it.
I'll have to check it out.
Unless it's been deleted. I hope not. Oh no, here it is. Yeah, this thread. So, have you been hearing all this buzz about this Wi-Fi coin that went nuts?
No, I have not.
That's exactly why, because you're always meditating or not stressing yourself out with all this stuff. So,
what did I miss?
So Wi-Fi is it's one of these coins. So there's like all these forks and clones and popping up because DeFi is so hot right now and it's so fast growing. And there's basically like 2 or 3 things that are taking off. So there's the DEXs and all these decentralized exchanges. So yesterday, Uniswap, which is the most popular one, did $1 billion in 24-hour volume. So it's now doing more than Coinbase, which is pretty amazing when you consider that they were almost unusable 12 months ago. They were so clicky and bad. The other thing is all the lending and borrowing. So you can lend your coins out to people. You can now get a pretty good yield. They're starting to like wrap Bitcoin so you can actually lend out your Bitcoin. And a lot of like the old time hodlers are now saying, well, any yield is better than just hodling. So that's sort of bringing more coins and collateral into the space. And the more collateral you bring in, the more that you can lend against and the more you can do. So they've got tokenized real estate now. Even your domain names, chartguys.eth or chartguys.crypto, for example. If that's worth $1,000, you can use that as collateral for doing another bet or a trade or anything. So it's starting to get really funky, all these Lego pieces clipping together. And the competition is now coming because everyone wants that liquidity and volume, and they're starting to issue their own tokens and you can say, well, I'm going to create the Dan Dex, and to try and get people to come over and use my exchange and bring their liquidity, I'm going to give them Dan tokens. And these Dan tokens are like a governance token, so they can vote on what you want to do with the platform and future features and whatnot. But you also get a percentage of all the fees. So it's basically a dividend. And some of these things that have been very successful, like Uniswap, were to some degree or another like VC funded or backed, or then you took it a step further and the team sort of didn't do the VC route, but they did an ICO, and the team kept a lot of tokens. And so some of these newer ones like Sushi and Wi-Fi are saying, well, let's just clone this open source code and start Sushi Swap instead of Uniswap. And there's no VCs that are getting rich. You guys can all have the governance tokens. It's owned by the community. The community are going to get all the fees. And this is actually called a vampire attack, because you're sucking the liquidity out of a protocol that can't really do much because they don't have a token. How do you compete and say, no guys, don't go over there? Like it's good to make the VCs and these founders wealthy versus the community saying, hey, we can get wealthy and use the product that we're using. So it's all this big experiment. And between all the funny names like Yams and there's a coin called Pasta and Ham, and there's a lot of just nonsense and experiments, but there's a couple like Wi-Fi and Sushi, which are actually really, really cool experiments and very well thought out.
That's fascinating. I'm very interested in that dividend-like aspect you mentioned there. I'm curious, what is Coinbase going to do? They are just the dinosaurs. Are they just waiting to be overrun? Or what is their game plan?
So there's what would I do if I was Coinbase? And what I would do is what FTX are doing. So you've heard me shilling this exchange, as everyone said 12 months ago, and now people are like, oh wow, this is a really cool exchange. And they've gone down this hybrid model. So they're like listing all these coins like they just listed Sushi. Normally these exchanges wouldn't touch this stuff that's so new and funky, but they're a bit like myself. They're really up to date with this, and they say, right, this Sushi thing is the real deal. Let's list it before people even know what it is. And they're going, well, let's integrate all our liquidity into some of these dexes. Let's build hybrid models. Let's make it easy for people to wrap their Bitcoin rather than have to go do it on a funky website they don't understand. So I think they're really going this model of a hybrid and trying to get the best of both worlds and cater to people that want to get into these other things. But the Coinbases and Binances of the world, they need to pivot away from the exchange model and become like the neobanks of the world, like trying to service those billion people in Africa and developing nations and whatever. They need to try and address those other, I guess, market shares that they can capture, because I don't think they can compete. You can't compete with these altcoin exchanges where anyone can list anything, and the fees are lower. The community have power. I think Binance are really stumbling because they've tried to do a few things in that area. Like Binance tried to create a DEX and it was a failure, and now they're trying to create like a synthetic asset platform. And they basically copied the name and the meme of Synthetics, which is like the most popular coin and crypto community in that little niche. And so it's like almost had the opposite effect, or I think they're going to piss off people. And Binance acquired CoinMarketCap, and last night we found out that the 4 higher ups have all left CoinMarketCap. So it's kind of like, some things you can't buy, and it's very hard to buy community and buy the memes and buy the excitement. And I think that's where Binance have kind of stumbled a little bit here, and Coinbase and that. So yeah,
very interesting. You must have your hand full with fundamental research. This space is transforming so fast. It's fascinating to watch.
Yeah, so Matt really helps me. He's full time. We've just put on Nick, who's another guy straight out of finance at uni. Told him to forget everything he knows and go down the rabbit hole. So he's been really good junior researcher. You've seen like our community are doing some good stuff themselves and sharing that these days. But it's funny. Remember like a year or two ago when everyone laughed at fundamental analysis and they were so highly correlated. It was like, what's the point of spending hours doing this? And now it's just recently, I think it's flopped on its head, and people are going, you've got to sift through these gems and know what you're talking about, and there's 100x, returns that are possible. So it's very, very cool. But anyway, so what's been happening in your world, Dan? The stock market, the US.
Yeah, it's wild. I mean, it's going to be a year that we just never ever forget. It's astounding to watch what's going on happen. And again, I've always been of the mindset to detach reality, the economy and the stock market, detach that For me, it's just numbers in cyberspace flashing around. That's helped me a lot in this market environment, because the people that are trying to make sense of it from old models or from fundamentals, in many instances, it's giving them a lot of trouble. So, I mean, just watching Tesla explode the last 2 months is just mind numbing, the amount of dollar volume. You know, you can see a small coin with a tiny market cap go, 100x, and that's, amazing. But when you're watching billions and dozens of billions of dollars fly around, it's really a whole different level. And it's interesting to watch the psychology of it, because everybody's expecting the pullback and the pullback doesn't happen. So then you have to have the reverse psychology and say, okay, well, if everybody's waiting for this pullback, does that kick the can down the road? And can we keep going up further? And how much power does the Fed have with what they're doing here? And then everybody points to the election and says, well, the stock market's not going to go down leading into the election because the president and the Fed's going to do everything that they can to keep it up in the meantime. And it's just creating an environment where, unfortunately, you got Davey Day Trader, and I know you've been covering that as he has ventured into and out of the crypto space very quickly, but he's still keeping an eye on it. But the downside of this market environment is you have people like him being right for a really long time. Everything's going to go up, just buy and hold. And it sets you up for eventually a very hard, painful lesson. And of course, he's not worried about that. He's got plenty of money, but the people that follow him are going to be set up for a very hard, painful lesson eventually. We just don't know when that is. So it's never a dull moment day after day. And we have to keep catching ourselves, because it's this bullish complacency where it's just up, we're going up again, and up, QQQ, and the tech sector is pulling back by that dip. And you get trained to just assume that that's the way that it always is going to be. And then that one time it's not. And that's where the pain comes in.
Yeah, absolutely. Dan, I'm just wondering, if you got a dedicated mic, the audio is not too bad, but it's a little bit like hissy. I'm just wondering if this program is picking up your wrong mic. If it's not, then it's not the end of the world. But I just thought, in settings, and
it could also be my headphones. I could get some headphones going.
Yeah, we might try that in a sec. How is it at home, guys? Is Dan's a little bit like hissy in that, like it sounds to me, or I'm just wondering if it's picking up like a computer mic instead of your other one, but not the end of the world. So people are saying,
you're right, it is.
Okay, do you know how to change it? In the settings up the top, there's a drop down menu where you can click on like another source for your mic, and then just click on save.
That should be it.
I think.
Ready? Check 1, 2. Better.
Yeah. No S's and Z's and hissing anymore.
All right.
Oh, you're perfect. That's beautiful in my earlobes, and I hope it's good for you guys at home. Sounds a little loud. Geez, people have been telling me it's too quiet for months on end, and now they're saying you can just never keep everyone happy, Dan, I'll tell you. So, yeah, I completely agree that the Pavlovian training of people just to buy that dip, and we've got this sort of balance where you're right, and normally you'd say that it's not possible to keep going higher, but when you actually look at the stats and the money on the sidelines, I think on Sunday night I covered these, the amount of cash in people's accounts is growing. Hedge funds have been taking profits and they're sort of lessening their exposure, but the market keeps going up. And the Fed, there's this big argument about whether or not the Fed is causing this, and the argument against this is, oh no, the Fed don't really print money, they create money to give to banks, and those just sit in the banks as reserves. And so people are saying, well, you can't use reserves to buy stocks. But the argument is, well, they can buy stocks with that other money, and that other money that would normally have to be reserves for everything that they do is now, it's just robbing Peter to pay Paul. So I don't think you can say that creating $3 trillion and giving it to banks as reserves is not directly causing a lot of this action, because technically they can't use those reserves to speculate, but they've just pulled money from elsewhere that would have gone there, and this, that, and the other. So I think it can continue as long as they keep printing.
It's also the confidence. I mean, the psychology of feeling like you've got a safety net below you. Well, the Fed's not going to let the market go down significantly, and they're going to do everything that they possibly can, and they've been doing it for this many decades. It's a big psychological boost for retail or hedge funds or whoever to be bullish, knowing that the Fed's got their back essentially.
Yeah. And I mean, remember when Powell and Trump were like butting heads and he was saying, I want 0%, I want more money printing, and Powell was sort of holding firm, and he's just completely caved on all of that. So I think the next thing to watch out for is if they go for this one last big push, big $1 trillion spend or multi-$1 trillion infrastructure spend, is the Fed going to have their back and be willing to fund that and be willing to take their balance sheet, higher and higher again? Because I feel like that's the message that that's happening in Australia. Our central banker is trying to tell the government that things are going to get bad if you stop the stimulus and government support checks. And he's saying you need to spend more. And he's almost given up on the sort of national government. He's now telling the states to spend more and don't worry about your credit ratings. Now is the time to spend. And so he's being almost like politically correct and direct as you can, without like yelling and directly telling them, because I think they know that there's a big recession that we're in, but this is possibly a depression if you don't manage it well. And he can't come out and say that, but he's trying to, I guess, convey that. And I think in America and Australia, we've started to have riots, or little riots and protests, I guess you'd say, and people really unhappy in Melbourne about the lockdown. So that's the next big question, isn't it, with another... You've got to be careful what we say for the algorithm here, but another, event in the US recently, and a lot of people are happy again. Is that going to kick off something else, or what's the media been like over the most recent events there?
Oh, it's a mess. It's, you have to, to combine the psychological state of COVID and being locked in and to put on top of that the divisiveness that's seen on social media, and you got Russian bots that are stoking the flames, and it is an absolute mess. And if you are not consistently putting out the effort to detach from that and be out in nature and remember the important things, it is very easy to get swept up in that wave of seeming chaos. And there's a lot of hopelessness out there. And I even feel like a wave of it every now and again. And I have to catch it and like, oh, there's that feeling again. And I can't imagine what, some people with different, living situations or things like that, how they must be going through this, because it is hopefully a once in a lifetime kind of deal. And yeah, leading up to the election, you're just getting so many ads jammed down your throat, and the divisiveness is just at its maximum, and that's not going to go away for the next few months. And then once you have the election results, you're going to have half the country that is extremely upset, and it's an unfortunate situation.
And as you say, a lot of people get upset about this stuff, and very few people are, in control of their emotions and their psychology, and stop to think, hold on, no matter what happens, does it actually change my everyday life? And if I didn't watch a single bit of this on the TV and I did my same routine, 9 to 5, come home, do my thing, how much different would your life be depending on what is happening outside, what's on the news, who gets elected, what the price of, particularly in crypto and stocks, like day to day, a lot of people now are getting into, I can't believe that Robinhood let people trade so many options. Like, the stats that I'm seeing there, and this, the danger. Options are almost effectively giving people 100x we talk about in crypto, but options can give people 100x, I guess the equivalent of risk is probably the best way to describe it, can't they?
Yeah, it's options are, I was trading for 4 years, very comfortable with charts and technical analysis. And I said, all right, let's give these options things a try, and lost when I started. I was a very confident trader. It's a whole different animal, and it's gambling without a doubt. Obviously you can develop the skill set with a lot of time and effort to be able to consistently make money with them. But if you're just starting out and playing options, you're gambling. There's no other way about it. And it's a very easy way. If you're using, weekly options that expire in the short term, your position can drop 50% faster than you know what is happening to you. And that's the wake-up call for a lot of people.
I couldn't believe that some of the data that was coming out about stock splits are this new hot thing, because they they drop the price, and beginners in this mentality, the unit bias that we've spoken about on the channel so often. Classic example again this week where this Wi-Fi coin deliberately made a very small supply, and so the cost per coin looks high, but if it had the same number of coins as say Bitcoin, and a lot of the cryptos have similar supplies give or take, then its price would be like $50 instead of $30,000. And so everyone gets their knickers in a knot, I was saying, and so this is a scam. Who would pay $30,000 for a coin? But it's the same arguments as the people in the media that say, what are people going to do when Bitcoin's 50,000? No one's going to be able to afford that. And they don't understand, there's 8 decimal places. There's just a low supply of coins. You don't even need to worry about any of that. Like market cap and the value of the project is all that matters, and you're buying a percentage of that. So in the stock world, we've now seen these stock splits, and people go, I couldn't afford one share of Apple when it was $1,000, but now they've done a 10-to-1 stock split, and the price goes to 100. You get 10 times as many shares, so you still own the same dollar amount. You're not in any better or worse position when someone does a stock split. But what we've seen is people come in and the beginners go, this stock was 1,000, now it's 100, I can afford it. And some of these are pumping 30, 40, 50% on stock splits alone, where absolutely nothing has changed fundamentally. And
it's a failure of the educational system, in my opinion, at least here in the US. I mean, for that to not be common knowledge, and you see it all the time. You ask a new person, why did you choose this over this? Because it was cheaper. But they're talking about the price and nothing to do with market cap because they don't understand that concept. So I know that I didn't learn about that until, getting past my initial prerequisite courses in college. That should be something that is taught freshman year of high school. And there's so much in our financial world that is glossed over that we don't learn about in public education. I don't know how it is in Australia, but it needs a whole reworking. There needs to be a whole class dedicated to financial knowledge, and they don't offer it.
No, I didn't get taught any of that. That was all self-taught for me when I was going through uni, and like finance and investing became that interest and hobby. But I was the same. Like when I first started investing, it was what a cheap, there's this silver stock for 5 cents. If silver ever goes to $100, like who is it? Cliff High, and a lot of these guys have been saying for 10 years now. It's just all those things, and the little numbers can turn to big numbers, and you've only got $1,000 in your account as a uni student. Oh wow, that would turn into $1 million, and all the reality quickly sets in when you learn about all the market mechanics. And it's the same when people say the US dollar is going to die and go to zero. I say to them, well, what's the euro going to be worth? Is the euro going to be worth infinity, and the Aussie dollar is going to be worth infinity? Like, look, the trillions of dollars of markets that are built off the US dollar at every single layer. A crash in a bad scenario would be like a 30 or 40% correction. And if the US is in that bad a shape, like the Europe, Australia, every other developing nation is going to be in terrible shape. So it's never going to happen. These people that say this is going to go to zero. Anything to add there?
That must be pretty depressing watching on TV what's going on in the US and realizing that we're behind the wheel here in a certain degree with the global economy.
There's a lot of people in the US that are different characters, but trust me, there's some different characters in Australia as well. And we've just started to see the last few nights pretty decent sized protests in some of the lower socioeconomic suburbs in Victoria and Melbourne. So, Well, Dan, I might bring up the chart, or do you want to bring up your chart and talk us through what you're watching as we head towards the monthly candle close?
Sure. So this is the monthly time frame for Bitcoin, and we have a bit of an indecisive monthly candle. It's pretty much, the upper wick and lower wick are the same size, showing a bit of indecision. Whenever I see that indecision, I always zoom in and look for more detail. So going to the weekly time frame, I just want to know, are we still in a weekly uptrend? And the answer is very much so, yes. And right now, we're just trying to sort out, is this a weekly bull flag about to see continuation, or are we going to set a weekly higher low and just require a bigger pullback? So I always look at, for me, it's just a visual as far as retracement goes. But if we retrace, a third of the move or less, continuation and a bull flag is definitely more likely. If we see another leg down and that pullback still looking for the weekly higher low, is a bit more significant, that's when we look for our good friend, the equilibrium and tightening range. So as of right now, the burden of proof is absolutely on the bears to prove to us that this is not a weekly bull flag, because the amount of strength we've been seeing in the crypto space, the weakness in the dollar, all things are pointing to the potential that we can see continuation. We're already seeing the stronger altcoins. We got ETH and we got Binance just made an attempt and double topped, but they're on the verge of confirming these weekly bull flags. So for me, I like the 2-month time frame a little bit better than the monthly, just because it makes it nice and clear for me visually. But again, it's the same thing. After huge volatility of 2017 into the crypto winter, we look for equilibriums. And the biggest question that I have that's going to potentially shape up 2021, are we setting a lower high compared to 13,800 to continue in this tightening range? Or can these bulls break 13,800 and be looking up at the all-time high? So 13,800 is the most important level for me. And that is what we are going to be watching very closely into Q4 2020 here to end out this year.
And do you want to bring up the Dixie? And I think that scenario there almost depends on the dollar, doesn't it? The DXY. Because if the dollar can have a really decent bounce here, that's when I think stocks, Bitcoin, gold, everything would be far more likely to go into that big correction for months. Whereas if this loses this support and drops, then that's when all these other assets can continue their parabolic runs.
Absolutely. I've been looking back historically, because I like the RSI, and that's certainly not the only piece of the puzzle, but I look back historically at our weakest points in the last 12 years since 2008. Where does the RSI on the weekly time frame generally bounce? And the answer is, 26, 27, 28. Those are the more extreme levels that we've seen in the last 12 years. And so here we are sitting right now at just under 30. So can we see another leg down into the $91, $90 range? Absolutely. But we should be expecting a weekly oversold bounce sooner rather than later, in my opinion. Now, again, going back to the retracements, is it going to be a weak bounce where we just look for a bear flag and then another leg down after the RSI cools off? Or can we see a big enough bounce to create the space for the higher low attempt and potentially the eventual weekly trend change? So the bounce has not started yet. The daily time frame is showing us a very clear downtrend, still in control. But when we get these bear breaks with a lack of bear follow through, we start keeping an eye out in the other direction. So that, combined with the weekly RSI, again, it keeps me cautious at these levels for a weekly oversold bounce on the dollar. And then, of course, just observing, like you said, how does gold and silver and crypto and stocks, how do they all react to the dollar bounce? Because we've seen multiple examples in the past couple of weeks where even just a little glimpse of a bounce, these little daily bounces here, have led to a decent little pullback in the crypto space, most notably. So what would a weekly oversold bounce look like?
Absolutely. And I might share my screen now, Dan, and just bring up, am I on the right screen there? My entire screen. You see that all right?
I got it.
Awesome. So we've just had that monthly close, and this can be like an inside bar, or we can just have one of these situations. I think there was a good example in the last bull market when you see this sort of candle here. And I mean, you can argue that there's a big wick, and I think that was when we did have that bit of a pullback there. I think that was one of our 40% pullbacks. But you can have these sort of spinning top looking dojis that then do continue higher. And a lot of things like the RSI, the overboughts and the oversolds, it's just another, I guess, tool in your belt and something to be aware of, rather than a hard and fast rule about, when this happens, it definitely means we need to have a pullback. Because when we get into these crypto markets, the more euphoric that we get, I think the more you need to take less notice of TA and even less notice of fundamentals. We've seen the power of the meme, the power of community, the momentum. And when if the Robinhood traders, and I would love to see Dave get back into crypto. I did tweet him and put out that offer because I think the Winklevoss twins did a very ordinary job. Did you watch that?
Yeah, I was a little bummed with that. That was like, man, you guys had time to prepare for this, and that's what you came up with. But
Time to prepare for that actual meeting. But I mean, like they've been in it for 10 years, and they were talking about like scorecards and referees, and then
yeah,
asteroids and mining. Like, oh god.
yeah. I mean, I would have expected a better elevator speech to hammer down the main points, and they were trying to connect the sports world, which is his world, but it was a bit of a miss in my opinion.
Yeah. And apologies. I did talk about shitcoins yesterday on Twitter, and all the Link crowd fire up and they say Link's not a shitcoin, and you got to remember that these guys refer to every coin as a shitcoin, whether it's the Winklevoss twins or Dave. That's just the language that they're using, guys. So even my beloved Ethereum is a shitcoin when all these other guys mainstream talk about altcoins. So don't get too sad about Link being a shitcoin. Anything else on your radar, Dan, that you think's really interesting at the moment? Have you been researching anything?
In the stock world, I'm focusing on U.S. marijuana stocks because leading into the election, we've got some catalysts, we've got some individual states that could be legalizing. If Biden wins, he's going to have federally medical legal. So there's some catalysts there, and I've been fascinated at how similar the U.S. marijuana sector, which is very small and underdeveloped, and they're traded on a lower exchange. They're not traded on the NYSE or the NASDAQ, but they're very similar to the cryptocurrency space. They saw weekly consolidation back at the end of May, early June, same as the S&P 500, same as Bitcoin. And most recently, they're seeing this similar, brief, healthy weekly consolidation that Bitcoin is currently seeing. So for me, I just associate that with, as high risk sectors as you can be in, essentially. And that is something that I'm observing, just those similarities between the two. So that's fascinating for me.
So what's one of the main just a good example, is it weed, the most common ETF?
That's a Canadian name. Go to TRUL, and that is on a Canadian exchange, and they're dual listed, so that company has shares on the US market as well. But
yeah,
it had that was blue sky breakout run that it hit, and then it sold off a little bit after its earnings report, and it's just trying to establish a new base of support.
Oh wow!
So
if I go compare, let's just compare it to Ethereum here. Yeah, wow, there you go. That's some pretty
similar there.
So this to me sort of tells me that there's this Fed-driven money and liquidity that is going into these risk assets, and it's just a big fire hose. And if there's enough money to go around, more and more money will continue to go into some of these riskier things. It's just the ideas that get funded, the startups that get funded. They're the sort of things that I think the Fed say, you know what? We don't really mind if there's a bubble. We'd rather have things that are overvalued. We'd rather have startups getting too much money than not enough. But then the argument is, well, Apple's borrowed $14 billion to buy back $14 billion of shares, and the rich and, Bezos. Did you see that chart of the people putting up the guillotine outside of his house?
Yeah.
So,
yes.
I mean, people are angry, but I think that's the problem that the Fed have to fix at the end of the day. The main problem that the government and the Fed and everyone around the world has to fix is the idea that interest rates and money printing can fix things. The economy is this sausage machine that I talk about. They've got to make a new machine or way of doing things. They can't just keep stuffing money in and wondering why things out the other side are, it's okay for these people, or the stock market's okay, but why is all the ingredients that we're stuffing in keep going to the wealthy? They need to really a reset of sorts, or whatever you want to call it, but it's not going to work. All these temporary fixes and unemployment, people on benefits, the food, the lineups for all that stuff, none of that goes away until you actually fix the system.
Yeah, and the way that the system, in my opinion, is going to have to change is drastic. You can't just fix little pieces. It has to rip down and be built back up, in my opinion. And I have no idea what that's going to look like, I've been reading a book. I'm trying to figure out the name of it right now. Not The Future of Money. It's a fairly recent book. I'm going to have to post a link.
A crypto one, or the end of money as
No,
we
not
know it?
crypto. I mean, it's not specific about crypto, but it's talking about what the Fed is doing and with the dollar and how, we're cruising for a bruising, and how deflationary technology and the rate of exponential technological gain, we're supposed to be in a deflationary monetary system the way that technology is moving forward, and we're just stuck in this old model that is not built for these times. And I don't read much, and it's not recently with the chart guys, but I've been fascinated with this book, so I'll have to dig up the exact title.
Another stat I read the other day was the benefit of being a software company and the taxation. So people with lots of staff, and they're paying taxes and on the wages, and those individuals are paying taxes, versus the robots and entirely automated software companies and whatnot. The tax that you get out of that is very different. The more you automate things, the less humans you need. And the fact is that populations are booming. We don't need this many people. There's not as many jobs. That's kind of where things are going. So they're the challenges that we need to solve. But I think we might wrap it up there, Dan. There's not too much in terms of price action that we can talk about here. Fairly non-eventful. Look, personally, I think it's just all about the dollar, like we've been talking about, that these either turn into bull flags and we continue to rip higher. And I do think that Bitcoin, the king, I tweeted the other day, it doesn't like being jealous, and everyone's talking about Wi-Fi hitting $38,000. I think DeFi is getting pretty crowded and bubbly. These are the times when the king's just been consolidating, and then the money goes sucked out of all those alts into crypto. The whales push Bitcoin higher. And last year, the year before, we just saw those $1,000 days. And I think once Bitcoin decides it's going to break out, if it doesn't go into this range, I think there's not a lot of space between that 13, 14 and then 20. So I think we're going to see $1,000 day at some point this year.
Yeah, after 13.8, like you said, it opens up a lot in terms of space. And, going from 14,000 to 15,000 is way easier than going from whatever the same percent would be from 12 to 13.
Yeah.
It's a big difference, and you see it all the time. As soon as something hits blue sky breakout, it is a game changer, and it gets a lot of people's attention. And my first reason for entering the crypto space, thank goodness, back in May of 2017, was looking at ETH, reading an article about it, and then saying, well, I know what blue sky breakout means, and that's where we're at, so I'm comfortable getting into this name. And that's the case for a lot of people. So it's going to be wild again. I can't wait.
The rest is history. 2017 Ethereum breakout. But guys, we've got a couple of other exciting things for those of you that have stayed till the end. The chart guys and I are going to be working on another little project together. We won't say too much about that now, but it does go hand in hand with our platform that we want to launch. And once we've got everyone on our new platform, that is going to be very easy to click from one of our features. And I won't say too much more, but a lot of things that are coming your way to help with your trading, your research, fundamentals, alerts, all that kind of thing. So we'll reveal a little bit more about that the next time Dan and I get together. If you've got any topics that you want to see us discuss, just let us know in the comments of this video or in the Chart Guys Slack channel. So thanks to everyone there. You guys have been very supportive of your community, of some of my altcoin research and ideas and stuff I share there. It's great to see the traders jumping on that as well. And big thanks to Dan, who's been more active in our community lately, and you guys are enjoying his style as well. So any final thoughts, Dan?
You just hammered it home. That was a solid conclusion.
Awesome. Thanks, guys. We'll see you again soon. And thank you, Dan. We'll have to catch up more regularly from now on, that things are all moving the right direction.
Yes, sir. See you next time, Alex.
See you guys.